You've got a big success behind you. You've made a lot of people some money. Why would Kinross give up such a good asset? Was that a conscious decision to move the M&I up so much? I mean, 90%, that's a significant shift. And knowing that you would get that kind of result, that's really smart. Smarter than any story we've heard for a long time. So what's the next big move for you? Or are you going to plateau for a while?
Hello and welcome to Crux Investor. First of all, thank you very much for watching. Really appreciate that. If you could, please give us a thumbs up, and if you haven't already done so, please subscribe by clicking the button in the corner of the screen. And if you can be bothered, please leave a comment below. We do try and get back to absolutely everyone. Now, today we speak with George Salamis, who's the CEO of Integra Resources. Now, this is the old team from Integra Gold. They took a $15 million company and sold it for $625 million. So they're getting a lot of credit from institutional shareholders and the market as a whole. They're pretty much an exploration play. We talked to George about how he hopes to drive the company forward and continue this growth that they have seen. Take a look in the description below to look at some of the topics we discuss. You can click on the relevant timestamp to take you to that part of the video if that interests you. Let's hear what George had to say. Hello, George. How are you, sir?
Good morning, Matt. How are you?
Not too bad. Thanks for joining us all the way from Vancouver. We're going to hear your story today, Integra Resources, but can you kick us off with a 1-minute overview for people new to the story, and we'll pick it up from there.
To know Integra Resources, you really have to kind of look back pre-Integra Resources, which was Integra Gold. And I promised to stop using the Integra Gold word by April, which is the 3-year mark of the sale of Integra Gold. So it was a spectacular win for shareholders. Obviously, a $15 million market cap, wing and a prayer exploration in northern Quebec, which we turned into a $625 million takeover by Eldorado Gold. So it's that same team that decided to stick together and sort of follow the same recipe of what our original success was derived from. And that is brownfields exploration, looking at assets that were perhaps unloved by major mining companies. In this case, Integra Resources, the DeLamar Project in southern Idaho had been dormant for the better part of 20 years, owned by Kinross. And we had a feeling that there was a lot that was left behind and that there was a different angle of approach. So we acquired the project about 2.5 years ago from Kinross. And at the time, no declared resource, and roll the clock forward to today, 4.5 million ounces of total resources, a maiden PEA study, which wraps some pretty compelling economics around the project. Mm-hmm. And so, we are of the belief that this is undoubtedly going to become a mine, and it's going to get a lot bigger. We're fully financed, got a great roster of shareholders, but most importantly, this great team that brought you Integra Gold is back.
Right.
Second try. Okay,
we'll let you off with the Integra Gold reference for another 3 months. But that was a huge success. I mean, $15 million to $625 million, and that's Stephen and Andre, et cetera. And they're still with you actively on this project. I get that. Why would Kinross give up such a good asset?
It's a question we get often, and look, I worked for major mining companies for half of my career, and mining companies do this as a matter of routine. An asset becomes tired, it sits as a liability on their books, whether it's a reclamation liability or just a straight holding cost liability. And so, this fatigue that sets in, and then sort of corporately the decision is made. We want out of this project. We just want it off the books. And it's not just Kinross, other major mining companies did it. Placer Dome, for example, the company that I worked for, has gave away many assets that are now very profitable mining operations. In this case, Kinross had this asset on their balance sheet for about the better part of 20 years, and it was shut down due to low gold and silver prices of the late 1990s, early 2000s. And so it was one of these assets, and I think that's key when you're looking for an asset to acquire. Look for an asset that was shut down during a low commodity price environment, which means that there's still juice left to be squeezed out of it, but it was just sort of dropped for reasons of lack of margin in the case of Kinross when they're operating.
Okay.
And,
So,
and
so,
that's basically-
so that's quite interesting. That's a phrase we've very little heard. Before we get stuck into what you think you've got, can we just talk about the plan when you set out? I know you wanted to replicate Integra Gold. I get it, but was there more to it? Because after the success of Integra Gold, I guess you're thinking, well, if it worked there, we can make it work again. But if you can explain a little bit about what you saw in this project specifically, which said, I think this could be the same thing all over again.
Yeah, well, so I think, again, going back to the sale of Integra Gold and the group getting together essentially and saying, we're going to stick together. So what do we want in our next asset? And we looked to all of the attributes that we had in the asset that we had in Quebec that we had just sold, which was, tier 1 jurisdiction, access infrastructure, great, large database to work with, and that I think is key, right? We're not starting from scratch by any means, and friendly jurisdiction, government support in the case of Quebec, obviously a great mining jurisdiction. In the case of Idaho, same thing, right? We've got a very mining friendly and supportive state government, and a large resource. And so, it ticked all of those boxes for us. We weren't about to go to tier 2, tier 3 jurisdictions. Been there, done that personally in my career. I'm getting a bit old to be going down that road. And so the choice was pretty easy.
Okay. And I know, and again, it was a big number, $625 million. But looking back, is there anything you learnt from the Integra Gold process? Could you have got more out of it? Could you have pushed it out longer before you did the trade, or did you get out at just right time? And what can you bring into the new project that you learned from that?
Yeah, I don't know that many people really realize that towards the end of the Integra Gold run, we were really close to actually flicking the switch on going into production. We had, I think there was 4 term sheets that would have seen us fully financed into production. And we were 6 or 8 weeks away from signing those term sheets. And so, we were underground, we had, the ramp was going in, we were buying all the expensive gear that you need to get into production. And then Eldorado came on with the bid. And then it became basically a benefit analysis. What does this asset look like fully developed by Integra and all suffering the slings and arrows of getting into production and looking at the landscape of juniors who try and build something, and the burning wrecked hulks of juniors out there who try and actually build something and fail, and the risks involved in that versus a premium offer which would put it in the hands of an experienced mine builder, and really the decision was easy at the end of the day.
And you guys must have done quite well out of it yourselves. Very appealing.
We did, yeah. We plowed a fair bit of our own capital back into Integra Resources.
You have?
That's it.
Okay. So if I look at the share price, May last year, not so hot. It started picking up, but didn't really start moving until this kind of gold price surge in sort of late August, September of last year. And you benefited from that, even though you're not a producer, which is a kind of unusual. Most juniors, certainly not in production, didn't really see that bump. What else was going on around then which kind of got the market excited about what you were doing?
Yeah, we had two pivotal events occur last year, sort of around the mid-year mark. And as a geologist, I would put equal importance PEA versus the revised resource estimate. I would personally put a lot more emphasis on that revised resource estimate, and that was key, because not only was it a large jump in resources, but it was large conversion of resource category.
Yeah.
So no longer were we dealing with 100% inferred resource. We're now dealing with a 90% M&I resource, and that came by a lot of work that our exploration team did on site. And so for the first time, this is where the investing public saw a discrete breakdown of the oxidation states of the mineralization. I'm not allowed to call it ore, by the way, apparently, but mineralization out on site per oxidation state. So what's oxide, what's transitional material, and what's sulfide? And that's important for us because we find ourselves looking at this project as a heap leach opportunity as opposed to a straight milling opportunity, which is what Kinross were basically, what's how they mined and operated for 20 years. They didn't care whether this was oxide, transitional, or sulfide mineralization. They were stuffing all of it through their mill and happy to get the recoveries that they were getting.
Okay. Can I ask? I would agree with you. I think most companies which put out PEAs last year didn't make a damn bit of difference to them in terms of the share price or people's perception of what the value could be. Was that a conscious decision to move the M&I up so much? I mean, 90%, that's a significant shift. That's a big number, right? Was that a conscious decision knowing the outcome, or was that just you got lucky?
You have to get lucky sometimes, right? But no, it was a conscious decision. There's 250,000 meters of drilling that we inherited in terms of a database from Kinross.
Yeah.
That drilling, the average spacing is 20 meters.
Right.
And so we knew if we were to categorize the mineralization styles and specifically the oxidation states, we knew we could get to a large conversion. Did we think it would get to 90%? No. So there was an element of luck there, but we knew that there would be a large conversion done that would occur by breaking down oxidation state.
Well, like I said, you've had huge success in the past. I'm trying to gauge just how smart the team is here, because if you have consciously made a decision to spend that money to try and move that measured and indicated, and knowing that you would get that kind of result, that's really smart. Smarter than any story we've heard for a long time. But given a lot of companies last year spent money and did things which had no material impact on their share price, you got to ask the question, whether how good or how strong or how logical were most of the management team spending money last year. But you've done something quite smart there. I get it. It's deliberate, a little bit of luck, but deliberate. But what's the next big move for you, or are you going to plateau for a while?
But yeah, so we're trying to stay out of the Lassonde curve, if you will, which is we're flatlining for the next 4 years. And in the course of marketing Integra, and we all do it, myself, the IR team, we're constantly polling our shareholders. What do you want to see? What's important to you? And I would say it's split 50-50 between the crowd who just want to see us just explore. They don't care about studies. Feasibility, that's boring. It's like watching paint dry on the wall. And we've got another 50% of our shareholder base who actually want to see us take this project as far as we can and de-risk the project with feasibility studies, with starting the permitting process, which we'll get to, I guess, later. So we're basically trying to satisfy both parties, which is keep the foot on the gas of exploration while we de-risk the project with feasibility level studies at the same time.
Well, that brings us to your shareholder register. Okay, you're sitting with a lot of institutional money in there, so slightly more sophisticated audience interpreting what you're going to do, what you have done, and what the numbers say. Okay, so I imagine they appreciated what you did with regards to moving that measured and indicated number through, and you've got a much smaller retail component here. So of the 50-50 balance there, the institutional guys want to see slightly more conventional reporting, feasibility studies, etc., because it allows them to measure what you're doing, or is it different from that?
Well, so I would say amongst, and this is just a rough polling, but amongst our institutional shareholders, for 50% of them, keeping our foot on the gas of exploration to increase the resource size is very important for them. And of the remaining parties, they just want to see us advance this project to a stage where, we can make a development decision ourselves, or, perhaps in the hands of somebody else, a development decision can be made.
So what do you want to do? There's different business models out there. Those are two almost opposing models. I don't think you can necessarily satisfy both sides. They're both equally good things to do, but you're the CEO, you've got to pick one. What are you thinking?
Well, I know from personal experience that once a project heads down the path of, okay, the feasibility study is here, we're now declaring that this part of the project is now subject to permitting. I know that's when usually the tap of exploration dollars typically runs dry, because you're now all of a sudden allocating all your financial resources towards, feasibility and beyond, if you will. And that's the boring stage for a geologist.
Yeah.
I know that for a fact. So we have 2 years to really keep our foot on the gas on the exploration side. So personally, I want to see that exploration accelerator sort of just keep amping up, because we are on to certain aspects of this project where we know we can grow the resource base perhaps to 6 million ounces or better. I don't think that's going to be a big stretch in the next 2 years, but personally, that's what I want to see in the near term.
Beautiful. So 6 million ounces is a number you're putting out there or thereabouts, right? Why that number? What does that give you? What does that tell people?
Well, so it vaults us into a different category. So, and again, just going back to the PEA for a moment. So the PEA study, the first PEA that we did on the project was really a snapshot of a project that we would build if we were to build a project today down at DeLamar. And so it was important for us to show a project that had a CapEx that was of a size that we could afford to raise. So it was important for us to show a CapEx on a heap leach project with a small mill that would cost us circa 200 million Canadian dollars to build. Company of our size, 150 million market cap, probably within range. If we had all the permits to build it today, we could do that. However, the next iteration of a PEA, which is to come out this year, is going to look at a much larger CapEx, a much larger production scenario, attracting a different crowd of investor, potentially attracting a different crowd of corporate buyer, maybe not the project that we would build, because it's obviously going to be a larger CapEx to get there. But it's that optionality of the project that we love, and we're going to try and maintain that optionality for as long as possible.
Okay, so you've got a huge institutional following. You've got a big success behind you. You've made a lot of people some money. So conversations around capital must be a little bit easier for you, because 140 million market cap-ish today is not bad. It's not bad at all. What are people telling you that they want you to do with regards to the type of financing and the type of raises that you may need to do over the next couple of years?
Yeah, it's funny. The mantra has been for the last 2-3 years. We don't like royalties. We don't like streaming deals. Don't take any debt on. Equity only, but please don't dilute us. And thanks very much. And please invite us to the mine opening in 4 years from now. That sort of thing.
Sure.
So
okay.
It was very much just sort of straight equity, and thankfully we've managed to raise money at successively higher levels over the last 2.5 years. We've resisted the temptation to issue warrants. That was one of the roadblocks at certain times in Integra Gold. We had to issue warrants in order to get financings done, and a big warrant overhang is something we had to deal with in the past. We don't have to deal with that here now. So equity is it, I guess, is the
right. And you're sitting on enough cash to kind of get you through what you need to be doing for the next, how long?
It's this cash that we have now, just over $30 million, is going to take us well into the end of the year, perhaps into January, February next year.
Okay, so maybe now's the time to kind of come on to the projects. So tell us a little brief summary of the projects, but what are you doing on each of those to kind of bring them up to the level that you want to be up at?
Yeah, so again, sort of following this theme of even split between exploration and feasibility level studies. So on the exploration front for this year, we've got close to 17,000 meters of drilling to be done. And that's just pure exploration. Understand that in the last 2.5 years, a lot of our exploration dollars have gone into twinning zones, slight moderate step outs just to confirm a resource model. Now we don't have to do that anymore. We're doing pure exploration, step outs, at a distance away from the resource envelope, going into new areas that have never been drilled but have all the same hallmarks and signatures that DeLamar and Florida Mountain have. So we'll be doing, call it 17,000 meters of that exploration, with a pivot to higher grade, because we're getting on to signatures that are revealing themselves to be, this is where the high grade is. This is where you need to look for high grade, and I think our news releases have shown that in the last few months. In addition to that exploration, that drilling, we're doing the target generation studies, lots more soil geochem, lots more geophysics, lots more mapping, field mapping, just to keep the pipeline full of targets to keep drilling.
Right.
And then on the let's call it feasibility level study angle, we've got about 7,000 meters of met drilling to do, and that's essentially collecting enough material within the oxide and transitional material to study gold and silver recovery variability within these two deposits. And that's key, right? We've got a good sense of what the recoveries could be, but for the level of feasibility met that we have to do, we have to start checking out what the variability is within oxide and transitional material.
Right. Okay. So you've got just over $30 million. That'll take you through to January, so 12 months ish.
Yep.
So you're going to be smashing through that cash quite quickly, drilling a lot of holes and moving these projects on. That's quite a big deployment of capital. At the end of which, what do you do?
Well, then, so we would then have to finish off the balance of the feasibility study. And, again, I get back to that 2-year rule where we've got 2 years to explore the heck out of this project. And then, then we get into feasibility mode. So my expectation would be another sort of 15 to 20,000 meters of exploration thereafter. And then we're also into sort of nipping and finishing up the last bits of the fees study. Right.
But in terms of going out and getting equity, you're going to have to get some money in 12 months' time.
And that's the fuel to the machine.
Right. So, but a similar sort of number. Would you then look to deploy circa another 30 million in 2021? Is that the idea?
I would love to be able to do that. Correct. Yeah.
Okay.
In my sense is that we'll be raising money at much higher levels because we've got a couple pivotal events to come out this year.
Okay.
Not only all exploration, but this PEA update, which is going to show what we think is going to be a big incremental jump in our production profile, our estimated production profile.
Okay. Need to ask, you guys made, you said earlier, a bunch of money for yourselves with Integra Gold, which is well done. It's the name of the game. How did you structure your own remuneration on this? Given you now don't need the cash, were you much more incentivized towards the success of this company, or are you pulling out large sums of cash for yourselves? I mean, where's the headset the mindset when you set this thing up?
Yeah. Well, so in Integra Gold, obviously none of us had a lot of skin in the game because we didn't have a lot of our own capital to deploy.
Yeah.
This time around, we've deployed our own capital and management. We own 10% of the company now.
Yeah, I saw that.
And we financings and we buy, we buy on market. Our shareholders keep yelling at us and saying, why doesn't management buy more stock? So we buy more stock and then we don't hear from anybody. No pats on the back, thank you. But it's what we do because there's good value in our stock. In terms of the remuneration of the executive group, it's largely the same as Integra Gold. We didn't, because of our success, we didn't all of a sudden grant ourselves doubles and triples on cash and bonuses, and so it's the same.
Okay, so would you say you're more incentivized now because you've got 10% of the company? If this thing goes where you want it to be, that's clearly you're going to make a lot more money that way. So you're not being frivolous with the cash on yourselves. Okay, fine. Can you tell us about what you think you talked about major catalyst moments for this year are. I get the drilling, the exploration. I get maybe you're aiming for the 6 million, but I don't know where you're going to get to by January next year. But why do you think the market's going to react so positively towards that, and you're going to be able to raise money at a higher price come, I guess, pre-Christmas? You're going to need to start having conversations, aren't you?
So if I look back over the last 2 years to sort of judge where shareholder value really took off, and what news that was related to. Really, three things. Top of the list would be drill results, and specifically high-grade drill results tend to move the needle far more than anything else. And so I talked about earlier this sort of pivot to high-grade focused exploration. We seem to be on to something there, especially in areas like Florida Mountain and War Eagle. So that's number one, and we'll have a few of those for the year. Point number two is discussions regarding the metallurgy. Now, consider this: for the last 2.5 years, I've been answering questions, or we've been answering questions regarding the metallurgy of this project. There was this cloud over the project for 2 years, to the extent that, why did Kinross sell this project to you? In either A, they exhausted the resource or reserve base, which we've proven. They essentially left something that was metallurgically challenging.
Yeah.
In other words, all the good stuff and all the metallurgically difficult stuff has been what's left behind.
Yeah.
And so we've proven that that's definitely not the case. And so any metallurgical data that we put out tends to move the needle as well from a value perspective. And then the third point is the PEA study. The PEA that we put out last year was a big value driver for us. I think that was our big move from 90 cents to $1.10, $1.20. So we have a PEA update coming out in September, which will again a snapshot in time. This is what the project could look like on an expanded, perhaps larger milling scenario, again with a heap component to it. But those three drivers: exploration news, specifically high grade, met news, and PEA, I think are going to be the big value drivers for this.
Okay, and you talk about in the presentation, you talk about some of these other opportunity and value enhancements, such as the DeLamar crush, the flotation, concentrate, et cetera. So you have identified other drivers of value down the line, but for now, your focus for 2020 is just that, is it?
Well, it's on the PEA update end,
yeah.
Correct. So that the PEA update is really going to be the same project that we put out last year in our maiden PEA, except for the fact that there were 2 million ounces of gold and silver, 2 million ounces gold equivalent, that was not included in that study. That was essentially within sulfide zone, if you will, at DeLamar. We didn't include that in the last year. This PEA update that we're doing will include that 2 million ounces plus of sulfide below the oxide and then transitional zones at DeLamar. That's going to require milling. So the trick for us in studying that is to determine how much of that sulfide can be crushed, ground, concentrated, floated, reground, and leached on site. I believe a significant amount of it will be amenable to that. And how much of that will be crushed, ground, concentrated, floated, and then shipped off to Nevada, for example, to somebody's autoclave or roaster for final process.
Right. And just let me ask, because when we were doing a little bit of analysis about, you were looking at your peers or people purportedly peers, they're not getting great valuations themselves. Do you think you've been fairly valued, or do you think you're getting a lot of credit because of your recent track record?
Oh, look, do I think we are undervalued? Yeah, massively. My job to tell you that. No, I do believe it. It's been for the last 2 years. It's been checking these boxes, and we're getting there, and we'll continue to get up the curve. But do I think there's lots more value to be derived here? Oh, absolutely.
Okay, and you have moved at quite a pace over the last couple of years, and I think we've had a few questions sent in to us with people going, "Hey, where's the news flow?" Because I think you've been delivering lots of good news for quite a while. Do you think there's some good news imminent for people?
Well, so we've cranked up the exploration program again. So we took a bit of a break over the Christmas months, obviously. Did the met drilling that we needed to do at DeLamar essentially to support future studies. And now we're back into exploration mode with that one drill rig. That one drill rig will commence drilling here. Actually, it has started drilling already on one very high-grade target called Henrietta, which is something that we had a lot of success in 2018. I think the highest silver values ever derived on the project was a hole that we drilled, and we haven't followed up on it since then. So we're drilling that now. That one exploration rig will become 2 in April, May, and then 2 rigs will become 3 in June, July. So, things are going to accelerate here as we hit into spring and summer.
Right. Okay. Beautiful. Thanks for that, George. That's a really nice introduction. We've not heard this story before. We've had a good look at you guys and obviously track record, and it's well documented. And it's nice to hear your plans now. Sounds like you've got no intention of soliciting unwanted offers for you at this point. As a geologist, there's a lot of fun to be had in the next 2 years.
No way. We want 2 years to squeeze more value out of this because there's so much more to do.
Beautiful.
At least.
Beautiful. Okay, well, George, thanks for running through that story with us. I couldn't help notice your mug there. Do you want to give us a close up of that?
Yeah.
What's it say? Weed, crypto, gold, and Integra. Okay, in that order. Thanks again, George. We will stay in touch. Let us know how you're getting on, and we will, share this with the viewers and continue to follow you with interest. Thanks again.
Awesome. Thanks. Cheers.